Good afternoon, everyone. Today's session is basically on the investment management concepts and approaches. Today, in this session, we're gonna see what does it mean by investments, what are the fundamental analysis, what are the technical analysis, and what are the international financial agencies. Now, first of all, let's understand what does it mean by investment. Investment is basically a set of asset or an item acquired with certain goals of generating some revenue or income or appreciation in the initial investments. In economic sense, an investment is basically a purchase of a goods or wealth for further generation of income. In finance, investment is basically a monetary asset purchased with an idea that the asset will provide income or some future generation or future income or the revenue for the organization as well as for the individual for the higher profit as a whole. Now, investment is the employment of the funds with the aim of quality. And the quality of an investment is that it involves waiting of a reward. Now, it involves the commitment of the resources which basically have been used or saved or put away from the current consumption or in the hope of some benefit that may occur in the future. Now, the term investment does not basically appear to be as simple as it's basically defined, but then the investment also has different categories and usage by finance experts and the economists. Now, it also have often been confused with the term of let's say various ways in which the investment is related or differentiated from financial and the economic sense, and how speculations are basically differ from the investments. But it must be clearly established that the investments involve the long-term commitment. Now, let's understand the importance of investment. The first and the very important aspect of investment, it has long-term expectancy. Now, what does it mean by long-term expectancy? Is nothing but investment decisions have become a significant as people retire between the age of 60 to 65. Also, the trend basically shows nowadays is longer life expectancy, but the earning from the employment should be calculated in such a way that that a portion is put away as savings. Now, savings by themselves do not increase the wealth, as we all know, but then this must be invested for the greater number of retirement years. The importance of investment decisions is actually enhanced by the fact that there is an increase in the number of women who are working in an organization. Now, let's understand that the men and the women will be responsible for planning their own investments during their entire work life, so that the retirement, at the retirement, they are able to have a stable income. But the increase in the working population, proper planning of lifespan and the longevity have ensured the need of balanced investments. The second importance of investment is taxation. Now, taxation is one of the very crucial aspect of the crucial factor for any country, which introduce an element of compulsion in a person's savings, and therefore the various form of savings outlets in the countries in a form of investments, which will help an individual to cut down on the taxes level. Now, this I discussed under the availability of the different investments media available to the business. The third importance is interest rate. Now, there are various interest rate is one of the another very important aspect which is very necessary for the sound investment plan. Now, interest may vary between the investments and any other aspect as well, but then this may vary between risky to the safe investments. The higher the investments, higher will be the rate of interest and the higher will be the return, but then the risk is also very, very high. But there is also difference in the different kind of benefit schemes that offers the different investments. At the same time, they offer different level of risk and the different level of return. The higher, as I said, the higher the return, higher will be the risk and higher will be the investments, or the investments will be moderate. Now, this scheme offer this basically aspect must be generally considered by an investment or individual before allowing any amount of investments to be done. Higher rate may not be the only factor favoring the outlet of the investments, but the investor should actually include the portfolio of several kind of investments. Now, one should actually maintain the portfolio wherein with the high risk, the high return, as well as low risk with the low return or a stable return. Now, stability in any kind of interest rate is very important by receiving the higher rate of interest, but the book is concerned with determining that the investors is actually getting yielding an opportunity and an acceptable return concentrated or commensurate with the risk of taking the higher return. The next importance is inflation. Now, every developing country, if we see today, have faced a problem of rising prices and the inflationary trend, because the prices are every day increasing. Now, in India, inflation has also become the one of the continuous problem since the last few decades. But in this year, the rising prices, several problems are associated, coupled with the falling standard of living as well, because the things are becoming more expensive, whereas the income remains stagnated. Before the funds are invested, erosion of these resources will have to be carefully done or considered in order to make the right choice of investments. That's the reason the investors will actually try and understand or search the outlet wherein which they can actually invest some and get the high return in a form of interest to cover any kind of decrease in the standard of living, and they can protect themselves in due to decrease in the inflation. Now, one have to actually judge whether the return on investments or the interest on or the return will be continuous, like there is likelihood or irregularity. Now, when they coupled this both of things together, that is the high rate of return and the risk, the one will have to find out the outlet which actually ensures the safety of principal. Besides high rate of interest and the safety of a principal in terms of investments are concerned, investor also have to keep in mind the taxation aspect of it, because one can actually save on a lot of money on the taxation. The investors actually earn the interest through the investment should not unduly increase or increase his taxation burden. It should stabilize the entire taxation thing as a whole. Otherwise, the benefit of deriving the interest will be actually reduced by increase in the rate of taxation. The next importance is basically the income. Investments is basically the decisions have assumed importance due to the generation of the additional source of income for the individual, because it gives another employment opportunity to generate income without probably doing anything. Now the stage of development in the country like India have actually accelerated the demand and basically has increased the number of new organizations and new services which have actually generated the more income. At the same time, it has generated more employment for the people who are staying in that country. Now jobs are basically available in all the sectors like software, business, professional offices, call centers, exports, import, tourism, hospitality. There are many other sectors like that. The jobs are available. Along with the investments, increasing the awareness of investment, it has actually given an additional opportunity to invest in the business. The more income have actually increased a demand of investments in order to build or bring more income and above regular income, that is what the person actually generates. The different avenues of the investments actually can be selected to support the regular income. Awareness of financial assets and real assets for the regular income or ability to and willingness to work and invest in such sectors have increased the awareness among the people, has increased the standard of living, has increased the job opportunity. At the same time, it has actually become a very important aspects of every investors today. Thus, we can actually say that the importance of investment is to achieve the good rate of return in the future, at the same time reducing the risk of an investor so that the return can be increased. The liquidity has to be increased from the students. At the same time, safety in the funds, selecting the right avenues of the investments hedged against the inflation. Now next aspect of it is the fundamental analysis. Now what does it mean by the fundamental analysis all about? Fundamental analysis is nothing but the method of evaluating the security or the bond, wherein we can actually bond or not the shares, investing the intrinsic or fundamental or the value of the business that issued by the security, that is either the equity funds or the bond. Now there are fundamental analysis believe that the firm need to have the competitive advantage. They have a stable earning growth. Like at the same time, they have to have the sales revenue as a whole so that they can actually go and invest in the organization. The fundamental analysis will taken care wherein they understand the entire organization's basics, right from the center point of time, so that the company can actually or the one who is conducting the fundamental analysis can actually understand the basis of the company, which will help the investors to understand the company's information, they understand the company's requirement, and they can help the investor to invest in the business. Now this basically fundamental analysis takes into consideration the future value of investments. So that, for example, it considers the time value of money. Let's take an example wherein if I invest 10,000 rupees today in the business, probably the value of 10,000 will not remain as it is in the future, from maybe 2 years down the line or 3 years down the line. It may reduce to a certain extent. So the future value is considered based on the discounting factor of the investments at a particular rate of interest. Now this is basically a very important aspect wherein the fundamental analysis is taken care of, and the market share, the financial reserves and surplus of the companies, and quality of the management, all these aspects are taken together, and the entire report is being prepared so that the investors can get benefited out of this entire fundamental analysis, and they can understand whether to invest in the firm or not to invest in the firm, when to invest in the firm or when not to exit the firm, or how much to invest as a whole. This actually factor, they do consider the economic background, they consider the company's financial condition, company's historical condition, they consider company's position right now amongst the competitor, because sometimes it might happen that the company is doing well but then they are not doing as well as the other competitors are doing. So in that case, what happens is they need to understand how company is functioning and the competitors are functioning. Now the fundamental analysis is basically attempt to understand and predict the intrinsic value of stock, that is what will be the future value of stock in the near future, to understand and predict the next value of the stock in depth. It has been done so that it can have the qualitative and the quantitative data as a whole. Fundamental analysis basically makes a life of investors very very easy, because it helps the investors to understand who probably do not have the enough knowledge about the market, but still they want to invest in the security market. Now, so fundamental analysis actually observe the numerous elements that affects the stock prices, such as sales, price earning ratio, that is P ratio, profits, earning per share ratio, as well as the macroeconomic industry specific factors as well. Now there are like basically top down and the bottom down method to conduct the fundamental analysis. The top down method might functions in a certain way wherein the entire market is analyzed, including the global macro environment indicators. That is, the entire market is being indicated or analyzed using the global factor into consideration. In the specific sector, let's take an example in the real estate sector or a pharmaceutical sector or the technological sector, all these things are analyzed. The industry, for example, the entire industry is organized. Now, industry is within the sector. Let's consider in the pharmaceutical sector, there is an industry wherein there are multiple firms involved. So all these multiple firms are also compared with each other, and the company's success is being analyzed. And at the end, the stock specific company will be analyzed. For example, the specifically speaking, let's say the analyzing the stock of the ABC organization. Now conversely, if we see the bottom line analysis is basically a very specific to the stock related thing, wherein the fundamental analysis observe the trend of the stock, how basically the stocks are moving, whether it is going upward, whether it is going downward, in what way it is going, the market and the price movement, company's financial statement, interest rate of equity, numerous indicators which are actually one of the goal of in the mind of the investors. Now there are numerous other indicators which helps the investor to understand, that is when to buy the stock, how to buy the stock, how much to buy the stock, and how to sell and when to sell it. All these things will be provided in the return of investments. Now, why do we as an individual requires a fundamental analysis? Fundamental analysis is very similar to the technical analysis as well, that attempts to predict which stocks are valuable and which are not valuable to the investors. Now, according to this propaganda, we can say that the fundamental analysis offers the full picture of possible moments of both stock market and the individual stocks, because as many elements are actually involved in it, and at the same time many elements are getting investigated before the investors could invest in the market. Now, in contrary, if we understand the technical analysis, now technical analysis is more of understanding the way the stock perform. That is, it is actually understanding the trading discipline employed and evaluated by the investments opportunity available to the investors. Now, this has been identified trading opportunities such as understanding the statistical trend gathered from the trending activity. That is, let's say a stock is moving in a particular way, whether it is going up, whether it is going down, and furthermore it has been evaluated in a way. There are multiple ways in which one can actually understand the entire trend of the price movement of every stock every single day, at the same time every second price. Such price movement and the volumes are analyzed. Now, this does not actually happen in the technical analysis, but does happen in the technical analysis, wherein one actually attempt to evaluate the security or the stock's intrinsic value. Now, technical analysis basically focus on the pattern of the price movement, trending signals, and the various other technical chart tools which evaluates the security's strength and the weaknesses, and which will help the investor to understand where to invest and when not to invest. Now, technical analysis can be used on any security which has some historical trading data, because one can actually compare the historical data with the current price movement. Now, this includes stock, the future and the options, commodity, fixed income, currencies, and other securities. Now, in this particular thing, one need to understand that one need to actually analyze. For example, let's keep in mind that there is a concept which can be applied to any type of security in this particular context, but it has to have some historical price related to it. In fact, if we see in the technical analysis, one plays a very important role in terms of commodities or forex, that is foreign exchange markets are concerned, where the trader basically focuses on in terms of price movement happened gradually change from previously to the current price thing. Now, we need to just understand that technical analysis is basically a trading discipline employed and evaluate investments and identify the trading opportunity in the price trends and patterns seen in this particular chart. Now, the technical analysis actually believe that the past trading activities and the past changes of the securities can be valuable indicator of the securities future price movement. Technical analysis can maybe sometimes it contrasted with the fundamental analysis, and with this focus the company's financials will be further evaluated the historical price pattern and the stock taken. The technical analysis are basically based on the three assumptions. The first assumption is the market discounts everything. That means many experts actually criticize this particular assumption, wherein the technical analysis is because it only considers the price movement and ignores the fundamental factors related to the organization. Now, technical analysis generally believes that everything from the company's fundamental to the board market factors to the market psychologies are already priced into stock, which always doesn't happen. But this removes the need to consider the factors desperately before making any kind of investment decisions. Now, the only thing which is remaining in the analyzing the price movement, which is like the technical analysis view as a product of supply and the demand for the curricular or for a particular stock in the market. Now, this happens when there is a fundamental and the technical analysis combined together and analyzed in the entire stock thing, so that the investors can actually understand the price movement and the background of the company, so that they can take the right decision. Because the technical analysis is a more broader concept, whereas the fundamental analysis just consider the price movement of the thing. The second is the assumptions under the technical analysis is price movement in a certain way. Now price move in a particular way that everybody understand, but then the technical analysis believe that the price move in a short or a medium or a long term basis. Now it does not happen like short term can be for a day, medium term can be for a quarterly basis, and the long term can be for a yearly basis, 1 year, 2 year, or 5 year, or 3 years. Now, in other words, if we understand, the price movement is likely to continue looking at the past trend, that is like the previous day's trend, or it actually keeps on changing every single day. But the most technical trading strategies are based on the certain assumption. The third assumptions under the technical analysis is historical trend has to repeat itself. Now, if we believe the analysis of the technical people, the historical trend has to get repeated itself. Like that, for example, the price is moving in a cup and saucer manner. This has to get repeated after a particular tenure of time in the terms of movement of the shares are concerned. The repetitive nature of the price movement is actually often predicted based on the emotions like fear or the excitement of an investment. The technical analysis uses the chart pattern to analyze these emotions, like in what way actually the emotions of the investors are concerned or connected with the stock, and in which way the price movement are taking place. There are multiple ways in which this movement are taken. There is head and shoulders, cup and saucer. There is only saucer. There is a upward trend. There is a downward trend. There are multiple ways in which all this technical analysis considered for the investors to understand how to go about it. Now the investors need to combine the fundamental analysis and technical analysis together to take the right decision so that they can have the balanced balanced investments with a sound return. Now technical analysis is basically a methodology that helps the investors to buy and either to take the decision or buy or to sell the market based on the market statistics. It primarily involves the study of all the charts showing the trending rate of the price of a stock in a day's time, in a 5 days time, in a monthly time, 3 monthly time, and a yearly time as well. Now, how does basically the technical analysis work is to perform the technical analysis. The investors needs to start with a chart shows in the price and the trading volume historically for the particular security or particular index, that is where the entire stock are been listed. For example, let's say one need to understand the technical analysis of Reliance Industry. They need to see the Reliance Industries price movement right from the beginning till now, and then they need to compare either yearly or semi-annually or quarterly depending upon individuals' preferences and individuals' investments option and the risk-taking capacity. The idea is basically to use the chart to identify the trend in which the stock are moving and how the changes are taking place over a period of time, and the trend and the pattern are actually changing again and again. Now it can be the fundamental chart of the chart pattern can be rectangles, triangles, Bollinger or head and shoulder, as I said, candlestick, etc. And some technical analysis may use the indicators and oscillator to interpret the chart data. Now, why does technical analysis matters a lot is, unlike fundamental analysis, which is actually focuses on finding the securities, the true value of it, whereas in the technical analysis does not happen. They understand the statement, financial statement, outlook, competition, macro environmental factor along with the stock price movement. Now, if we understand the investor's perspective correctly to interpret the chart and what message this particular chart gives, the price movement has to consider, and the investors obviously have to take the right decisions only on the basis of investments options available. Now, the next aspect of this particular thing is ADR and JDR. Now, JDR stands for Global Depository Receipt, is basically a blank certificate issued by more than one country of share in the foreign country. Global Depository Receipts are very similar to the ADR, that is American Depository Receipt. It is a type of bank certificate that actually represent the shares in the foreign country, such that the foreign branches of an international bank then holds that particular shares in their hand. The shares themselves trade in the domestic share market, but globally in a various banks branches offers the share for sale. Private market uses basically the JDR to raise the capital denominated either in US dollars or euros all across the globe. Now, whenever there is a private market attempt to obtain this kind of JDR in the banks in terms of US dollars or in terms of JDR are referred to as EDR, that is European Depository Receipt. Now, investors trade JDR in a multiple market, which they generally refer to as a capital market. Capital market are actually considered to be negotiated certificates. Investors use the capital market to facilitate the trade of a long-term debt instrument for the purpose of gathering the capital. The JDR transactions in the instruments market tend to have a lower associated cost than other some mechanism that investors use for foreign trades. The next very important aspect is ADR, that, as I said, ADR stands for American Depository Receipt. Is a negotiable instrument issued by only US bank, denominated only in US dollar, represent the security of a foreign country trading in the United Stock Exchange market. It does not traded globally all across the globe. Now, this receipt actually offers the sale to the American investors. By the way, in terms of ADR, US investors can invest in non-US companies as well, but then the dividend are paid only to the ADR holder in the US dollar strictly. ADR are actually easily transferable from one person to another person without any kind of stamp duty. The transfer of ADR actually takes automatically from number of shares underlying in one's account. Now, ADR are the stock that trades in the US but represent the specific number of shares in the foreign corporations, such as let's say Alibaba or just a Baba. Like regular stock, ADR is bought and sold in the US market, and they also trade in the US market in a very clearly manner that US system has been settled, and investors are allowed to invest in the business. Now, one of the greatest advantage of ADR is basically twofold. For an individual, ADR can be easily and the cost effective manner to buy the shares of the foreign country, and at the same time the return of investments can be taken care of. They save the money by reducing the administration cost by avoiding the foreign taxes on each transaction. The foreign entities like ADR because they allow the non-US companies to gain more benefit in the form of an ADR exposure, allowing them to tap into the wealthy US market, etc.